Welcome back to the Wall Street Podcast. Today, we're digging into the Wall Street Journal's edition from August 13th, 2025. We'll be pulling out some key insights on the economy, the global AI standards race, and also the politics surrounding crypto.
Right, and the journal's lead economic story gives us our starting point. It's on page A1, titled, July Inflation Held Steady with 2.7% Rise.
Okay, so July's Consumer Price Index, the CPI, it stayed put at 2.7%. That matches June, and actually came in a little under the 2.8% forecast.
But the core CPI, which strips out food and energy, that actually rose to 3.1%, so that's above the 3% forecast, and up from June's 2.9%.
So, bit of a mixed picture there. Headline steady, core up. And this, combined with what seems to be a slowing labor market, it brings a Fed rate cut into the conversation for next month, doesn't it?
It certainly does. Treasury Secretary Scott Bessent has even floated the idea of a half percentage point cut. That's quite significant.
It signals a potential policy shift that, could directly affect markets and borrowing costs for everyone.
And within this, well, there's the ongoing debate about tariffs. The Trump administration says tariff inflation has not happened.
Yeah.
But you have analysis, like from Goldman Sachs' Jan Hatzius team, suggesting U.S. consumers will eventually bear about, 67% of those costs?
Yeah, hitting things like furniture, tires, everyday goods.
Exactly.
But here's maybe a bigger issue cropping up. The data itself. The Bureau of Labor Statistics, the BLS, they just revised May and June job numbers down significantly.
By 258,000 jobs. That's a huge adjustment.
It is, and it comes amid some controversy, right?
Oh.
The BLS commissioner was fired, a new nomination, plus survey response rates are way down.
That's a critical point. The establishment survey response rate fell from, I think, 61% down to 43%. That impacts accuracy.
So given these big revisions and the, let's say, political noise around the BLS, how should people relying on this data, market participants, policymakers, how should they react?
Well, I think you have to expect more skepticism. People will likely want more than just the initial headline numbers. They'll look for broader data sets. And that probably means, unfortunately, more market volatility reacting to releases and policymakers needing a wider range of inputs before acting.
Right. Trust in the official numbers seems fragile.
It could certainly erode public confidence in economic management overall.
Okay, let's pivot from economic data to global tech, another front page story in the journal. China's open source AI lead jars Washington, Silicon Valley. This details China's push with its open source AI models.
Yes, models like DeepSeek, Alibaba's Qwen, they're offering them freely to try and make them the global standard. And this is putting pressure on U.S. firms like OpenAI, which then released its own open source model, GPUs, partly in response.
What are the geopolitical angles here? The article mentions U.S. concerns about China's cyber sovereignty idea.
Right. The fear is that China could embed its own values, maybe surveillance tech, via initiatives like Belt and Road into the very fabric of global tech standards. It could lead towards a kind of splinternet, a fragmented digital world with different rules.
And how do these Chinese models actually perform?
Well, some research suggests that Chinese open-weight models like Qwen 3 are actually starting to outperform U.S. open-source alternative, particularly with Asian languages and cultural context. Sometimes they're larger models, but the performance is notable.
So thinking beyond just the tech race itself, what are the bigger geopolitical stakes in this battle for AI standards? How does it change international relations?
Well, fundamentally, whoever sets the AI standards influences the architecture of really all future digital systems. Control there means significant economic leverage. It means influencing how information flows globally, data privacy norms. It really shapes power dynamics between nations.
Okay, one more area to touch on, the intersection of politics and digital assets. The journal mentions the Trump family's crypto activities and links to Binance. This raises some questions, doesn't it?
It definitely does. It highlights potential conflicts of interest, especially when you think about things like stablecoins and regulation.
So how might this kind of convergence influence the future regulatory path for crypto?
It could go either way, really. It might accelerate the push for clear regulations to address transparency, market manipulation concerns, and the influence of political figures in the space. Or it could complicate things further, making bipartisan agreement harder to reach. It definitely brings the issue to the forefront.
And just bringing this back to the broader public impact, these aren't just abstract issues. While overall inflation might seem stable, people are still seeing price hikes, right?
Absolutely. Things like furniture, tires, as we mentioned, but also services like airfare, medical care. Those specific categories are still showing notable increases, hitting household budgets directly.
And AI isn't just for tech companies anymore. It's changing daily life.
Exactly. You even see things like the return of in-person job interviews, partly as a way to counter potential AI-driven cheating in applications or remote interviews. It's reshaping practices like hiring.
So wrapping up, perhaps the final thought for you, our listeners, is to consider how all these threads connect. The potential unreliability of economic data, this intense geopolitical fight over AI's future, and the increasing entanglement of politics and digital money. How will these forces together reshape investment thinking and global policy going forward?